All right, guys, trying to enjoy a beautiful day before this storm and the reflection behind me rolls in. Wanted to shoot you guys a quick video here before hitting the field and getting back to work for the drain business. Now, according to a recent report that was done by Redfin, investors are actually increasingly withdrawing from the real estate market due to rising borrowing costs and the continued risk of falling home prices. In the fourth quarter, investors purchased 46% less homes annually, with the largest quarterly decline being recorded except for the pandemic's beginning. Single-family home purchases actually dropped the most. They were falling nearly 50% annually in the first quarter, or rather fourth quarter. The report suggests that many investors are putting their money into other asset classes, that might offer better returns, maybe a drain business, for example. But it's making it more challenging for landlords to reap larger returns. However, this pullback could mean individual buyers have a better chance of buying homes without all the competition that they've been seeing recently from deeper pocket investors. Although mortgage rates have decreased from their 2022 highs, it is uncertain at this point whether investors will return to the same type of high vigor that they did in 2021. Fannie Mae actually has made a forecast that predicts a decline of over 6% in home prices over the next 2 years, according to Redfin. Home prices have dropped 11% over the past 7 months, after gaining just 1% year over year, as opposed to the 15% increase last year. However, despite the decline in housing prices, the National Association of Realtors reported a 36.9% drop in year over year sales of U.S. homes in January. So there are signs of some home buyers returning to the market, and it's attracted by improving mortgage rates and lower home prices. However, investors appear more hesitant at this point to jump back in. According to Eric Bryant, who is Open North America's Executive Vice President of Strategy, Bryant actually explains that property investors know home buyers cannot afford mortgages at such high rates, and they don't want to overpay themselves. So what they're doing is sitting on the sidelines until a bigger shift in fundamentals turns housing into their favor once again. So demand will start to dry up, then the supply will increase, and that'll allow investors to bank on prices dropping more before they buy back into the market. And that's the concept that I think even a lot of first-time home buyers are following right now, or people even relocating from where they've been. Overall, the real estate market has definitely shifted. In the fourth quarter of last year, the top 10 metro areas with the biggest decline in investor purchases were also the ones that saw the most demand during the pandemic. The area I'm sitting in here, tons of demand during the pandemic. And as a result, these areas are experiencing the largest year-over-year price declines as housing demands cool down. This property I own here was at $1.2 million last May and now sits at just about $1.1 million. It lost $100,000 in value, and at one time was all the way down to almost $1 million in value. So literally I had seen about a 15% decline at one stage. But locations like Las Vegas and Phoenix, which were considered pandemic boom towns, they saw approximately a 67% drop in investor home purchases compared to the previous year's numbers. Nassau County, New York, Atlanta, Charlotte, Jacksonville, Nashville, Sacramento, Riverside, California, Orlando, Florida, they all saw over 50% drops in investor purchases during the same period as well. So why is the sudden shift taking place? We should be asking ourselves. Well, investors flocked to these areas during the pandemic because they were taking advantage of this booming rental market and soaring home values. However, as the demand for housing started slowing down, many home buyers are just being priced out, plain and simple. As a result, investors are now pulling back from those markets, and that's what's causing this change in demand and an eventual increase, if not already, in supply, which should affect home prices down the road. What are your thoughts, folks? Leave them in the comments below. Please help us get out of this YouTube funk by dropping a like on this video. It's extremely useful. We're very, very busy putting these videos together. It takes a lot of time, and we're out there running. I personally have 6 businesses that I run, and so I'm out here really trying to make sure that we continue to bring you guys updates to what's happening economically, and do so with some lovely chimes in the background, guys. I mean, what more can you ask for? So with all that being said, certainly appreciate you guys joining me today. Make sure you're a subscriber. if you weren't one already, and join us on the next video too. We're going to continue to keep you updated on exactly what's going on economically and exactly how you can go further, faster financially and pop that cash flow through the roof. So you know what to do. Make it a great day today, and most importantly, keep on cash flowing. Take care.